Next, we have Badger Meter. Badger Meter CFO, Bob Rockledge, and Vice President of IR, Corporate Strategy and Treasurer, Karen Bauer, are joining us virtually today. Badger Meter is not only a provider of measurement hardware, such as water meters, but it's also a provider of connected products and software for the water industry. Last month, the company just announced the acquisition of SmartCover, so I look forward to diving more deeply into that acquisition, which expands into its connected equipment portfolio. Badger Meter has just under 29.5 million shares, trading around $208 for a $6.1 billion market cap. Cash before the deal of $295 million. For a total enterprise value of $5.9 billion. So we are pleased to have Bob and Karen joining us. Bob joined the company in 2018 and was named CFO in early 2019, while Karen joined BMI in July 2019. So with that, I will turn it over to Bob for a presentation before we go into Q&A.
Great, and good afternoon, everybody. I just want to do a quick mic check, make sure you can hear us in the room.
We can hear you.
Excellent, great. So Karen will control the slides as I go, and largely overview, and then certainly take Q&A. As you alluded to, certainly most of you know Badger Meter as a water metering company. The meter is in the name, but absolutely we are now a premier smart water solutions provider. For the first 120 years of our history, our story was all about, or first 115 years of our history, largely about the meter to cash portion of the water cycle, but through a series of acquisitions over the last several years in the area of water quality, pressure and network monitoring, and now most recently the SmartCover acquisition, we've expanded that presence beyond the meter to now be able to service more fully aspects of the complete water cycle. As a business, we benefit from being an industry leader primarily in North America. And have played in the North American market for our history. We'll celebrate our 120-year anniversary actually a week from Saturday, so we're very excited about that. From attractiveness and long-term fundamentals in terms of the investment thesis, not surprisingly, in fact, the prior discussion was very much about technology and digital adoption in the water space. In the metering space, it's largely around advanced metering infrastructure, a trend that quite frankly is been in existence for a variety of years, 20 years plus as it relates to AMI. I'll talk a bit about kind of adoption rates and penetration rates and where those stand, but essentially it's that technology and digital adoption that's differentiating our portfolio to continue to bring to bear for utilities additional equipment, hardware, and software capabilities to improve a variety of their operating metrics in the areas of efficiency, resiliency, and sustainability. We participate in a market that is very much on the metering side of the business, very much replacement cycle driven. And so there is a durability to our revenue book and a stability to that. And that natural market stability that comes from the replacement cycle has only been augmented by the growth in our recurring software business or software line of business, which I'll talk about here momentarily. Certainly over our history, we've had a culture of innovation. We were the first to put a radio on a meter in the late 1980s. We were the first to bring an ultrasonic meter to the North American market about 15 years ago. And clearly, as we talk about our differentiation, our capabilities in the area of cellular Internet of Things devices to bring smart metering to market is an extreme competitive advantage for us. Certainly from a profile standpoint, we have a premium financial profile and an operational track record, which I'll have one slide to just put numbers to some of those statements. You know, if you look at this, if you look now more broadly to our portfolio, I'll talk first about the macro drivers, and really I don't think any of these will surprise you as it relates to the water and municipal utility water end market. You see 7 or 8 secular drivers on the left-hand side of this page. I would say today, in today's environment here in 2025, the 3 that are probably most salient and relevant to municipal water utilities is workforce churn and the retirements and retirement experience that utilities are experiencing. I'd say the second contributing factor would be aging infrastructure and the underinvestment in water assets in North America. And I would say on a more emerging basis, the discussions we have with customers are about water scarcity and climate change. It doesn't mean that those other drivers aren't relevant. I was just trying to highlight three or four of the more, I would say, top of mind challenges that utilities face that in turn cause them to interact and engage with discussions on Badger Meter surrounding our solutions. On the top of the slide, you'll see the term choice matters. For us, when we say choice matters, it's bringing to bear the broadest portfolio of technologies to achieve outcomes in the areas of measurement and control, connectivity, communication, insights and action, and collaboration and support. So I'll do a little bit of around the horn here without going too deep into the tactics, but from a measurement and control perspective, certainly people think of Badger Meter and they think of water meters and the meter to cash cycle for utilities to present a bill to customers. But the reality is our measurement and control capabilities expand well beyond the meter to now include water quality sensing, pressure management devices, and things, hardware that is essentially deployed through both the distribution network and the water collection system to eliminate blind spots for utilities, both from the hardware standpoint of detecting and measuring, and then later on the software aspects to provide them insights and action. A lot of those flow meters or water quality sensors then are enabled through communications capabilities. Certainly on the water metering side, it's all about advanced metering infrastructure and AMI, but some of those other devices are enabled through remote telemetry units or other communications protocols. Our core competency is around cellular. As a communication method, we have a great capability in the area of commingling electronics and water in harsh environments to provide sensoring capabilities that are durable, long-lasting, and live in those harsh environments, while then bringing that data and information from those hardware devices into our head-end software to be able to provide insights and actions for utilities to tackle those challenges that they face and deliver outcomes in the area of whether it's around the meter, certainly revenue generation and capacity, but also utility efficiency, conservation, and compliance. And certainly underpinning all of that hardware and software capabilities is a world-class collaboration and support organization that we believe certainly differentiates us relative to the other competitors in the metering space, in the distribution network, and now even more so with SmartCover, the collection network. A year ago, about this time, we decided our ever-growing Choice Matters portfolio had all sorts of great, wonderful hardware, software, and equipment, but our story was a bit cumbersome in how we would meet, whether it's our utility customers or our commercial and industrial customers, wherever they are on their maturity or digital adoption journey. And so a year ago, we announced and rolled out what we now call Blue Edge by Badger Meter. Blue Edge is simply the technology umbrella by which we talk about that broad Choice Matters portfolio in those same core columns or core focus areas. Blue Edge is, in our mind, extremely customizable to the 50,000 utilities that operate in North America or the many, many commercial and industrial users we service, wherever they are on their A, maturity level, B, sophistication, C, their journey of digital adoption. And so whether they're approaching Badger Meter from a metering standpoint, or whether they're coming to us as a customer that knows SmartCover as an example, we can have meaningful discussions with those customers, regardless of where they are on their journey to essentially customize that offering to meet them wherever they are. Equally, I would say Blue Edge serves not only as how we service and interact and deliver results to our customers, it also serves as a lens for both our R&D activities, which I can talk about certainly, as well as our acquisition focus and funneling. And so Blue Edge really for us has been a differentiator in how we talk about our ever-growing portfolio in meaningful ways to solve customer challenges. This slide is my favorite to present because it essentially takes all the wonderful high-level statements that we make about being a leader in the industry and having a differentiated degree of performance and having core competencies in select product areas and being able to grow beyond the meter. This slide condenses all of that into numeric takeaways. And if you look at sort of the last 5-year horizon, if you will, I'll skip over the 2024 piece, which I think speaks for itself. If you look over this 5-year journey, I think what you can absolutely see is results-based culture that has driven above market results. And so if I start with consolidated sales growth, the beginning of this period is pre-COVID. The duration of this period covers COVID through supply chain, through inflation, to now hopefully a quote unquote more normalized environment on a relative term. And you can see through that time frame of probably three of the most difficult operating environments, we were able to grow our business at a 14% CAGR. That 14% CAGR is not oversized by pricing our way to excellence. It's largely been about volume growth. Yes, there's been some acquisitions during that time frame, but they're not driving the lion's share. It's really unit growth, and in the case of AMI and cellular AMI, market share gain that has driven that compound annual growth rate. Turning to the SaaS revenue portion of this exhibit, I think sometimes we surprise people when they think of us as an industrial company. Maybe they should be thinking about us as a industrial tech company for sure. And we sometimes surprise people that under the hood of a 120-year-old company, we have essentially a $50+ million recurring SaaS line of business that I will note is not a kind of selective elective revenue model. It is a 100% attachment rate to a hardware sale. So this 28% CAGR you can see in our software line of business is not accidental. It is it's a lagging indicator, quite frankly. The leading indicator is every time we talk about advanced metering infrastructure market share gain to cellular AMI, in our case, that is the leading indicator, and we've been able to successfully grow that above our quote unquote line average CAGR. From an operational excellence standpoint, we always talk about we have two primary levers to operating margin improvement. It's certainly the durable structural mix benefit from selling higher profit technology-oriented products, continuing to augment the resiliency of our business model through the growth of software that offers the opportunity to expand gross margins. And equally, our revenue growth story, whether it's the historic 14% CAGR or our forward-looking 5-year outlook for high single-digit growth, that is largely underpinned by not going out and having to win and service new customers. It's all about selling more to our existing customers. And when we do that, we're able to lever our SEA as a percent of sales. And those two levers over the last 5 years have delivered 450 basis points of operating margin improvement, whereby just 5 years ago, we were more in that 15% OP margin range. In 2024, we closed the full year at 19% operating margins. Thinking about that then and turning to our ability to efficiently manage the business, we've been laser focused on free cash flow generation, largely through managing primary working capital. You can see we've improved our primary working capital intensity by 620 basis points over the same time frame. And over that exact same time frame of 2019 to 2024, on average, we've converted free cash flow at a ratio of 121% of earnings, which I think speaks to itself in terms of generating the fuel to fund essentially our capital allocation priorities, which I'll talk to here in a moment. One of those capital allocation priorities is acquisitions. And so as Sarah mentioned, at the end of January, we announced the acquisition of SmartCover. Who is SmartCover? SmartCover is the market leader in sewer line monitoring and lift station monitoring solutions. As I alluded to, one of the macro drivers of our utility water business is all about digital adoption, and SmartCover checks that box to a T. Whereas, let's say, advanced metering infrastructure is in the quote unquote 5th or 6th inning of market adoption after, quite frankly, 30 years of being in existence. This is a market where we're in the 1st inning of digital adoption around sewer line and to a lesser extent lift station monitoring. And we believe this business, which by itself pre-acquisition was growing at a 20% CAGR, through the combination of our sales channels, our multi-decade customer relationships, we can continue to augment what was already a great standalone business by bringing our channel and customers to bear to drive wider spread adoption of these technologies. In this case, monitoring at the sewer line to detect and prevent stormwater overflow, combined sewer overflow, infiltration and inflow, along with cleaning optimization to, again, much like our metering business, drive positive business outcomes with our utilities in the area of efficiency, resiliency, and otherwise. This, much like our own business, is not just a hardware sale. It's a hardware sale that comes with a high attachment rate to both the software and recurring support revenue structure. So much like our own business has grown its recurring revenue at a high CAGR, this equally provides that same opportunity, just being more so in the wastewater collection system space than our historic presence in what otherwise would have been the drinking water distribution network. I kind of talked about some of these synergies, but essentially what we have is a great business by itself that, when combining with us, brings to bear market opportunity in a largely unserved market. Just to give a single statistic on sewer line monitoring, there's 25 million manhole covers in North America, and today less than 0.5% of those are monitored on a real-time basis. I'm not here to suggest that that's going to be in any way 100% connected and or monitored, but even if it's 5%, there's significant runway here to service, and each of those brings with it a high margin equipment sale and then a very high attachment rate to a software sale. In addition, we, as I mentioned earlier, have this great core competency in mixing electronics with water and or humid and or harsh environments. And I can't think of any environment that's as harsh as a sewer. And so we can bring to bear a lot of the capabilities that we already do greatly on our AMI products and our metering products to bring the scope and scale to enhance field longevity and field performance, to continue to capitalize on what's essentially a market, a wide open market for which SmartCover already has 50% share of that small penetrated installed base. And then equally, we can bring to bear our same communications capability. So that's the SmartCover acquisition in a nutshell. Turning now more to our capital allocation priorities, I don't think it will surprise anyone that for 120 years, we've been an innovator, and we continue to remain invested in being an innovator, not only in terms of how we invest and develop products, but innovation for us would also be expanding our capacity to service the increasing demand and strong demand environment in which we operate. We've been committed to a dividend growth and growing our dividend in line with earnings. In fact, in August of 2024, we announced a 26% increase, again, commensurate with earnings growth, which for us represented the 32nd consecutive year of dividend increases. So if there were a dividend aristocracy status for a SMID company like ours, we'd be in it. And then lastly, certainly acquisitions, and the acquisitions of SCAN, ATI, Cyrenix, Telog, and now SmartCover are certainly the types of acquisitions we would continue to stay focused on. Again, being a pure play water company, largely oriented to the municipal water space, but expanding and growing in very near adjacencies around our core meter discipline, meter to cash discipline, but being able to service and sell to the same customers additional products to solve the challenges that they face. And any times that those can be hardware enabled software, insights and analytics, that's checking all the boxes for us. You had heard earlier, net cash position, a little bit less now that we've acquired SmartCover, but still adequate cash on the balance sheet, combined with borrowing opportunity to continue to fuel our M&A priorities around capital allocation. This last slide is really a summary of the previous 9 slides. I won't read it to you in gory detail, but essentially the salient takeaways for me are certainly have been and will continue to be an innovator. We're benefiting from what I would call robust demand environment and macro drivers that I would say are not 1 or 2 or 3 year dynamics. They're multi-year, if not multi-decade. We're continuing to augment and grow our SaaS revenue base, which enhances profitability. And there's just a lot of really good, constructive, and durable aspects of our business model that we've benefited from in recent years, but we've also outmaneuvered, stick-handled in some cases our competitors to drive above market growth. And given that we talk about a high single-digit growth outlook as we move forward, we expect that to continue to occur. So I'll pause there in terms of prepared comments.
Great. Well, thank you for that comprehensive overview. Maybe sticking to the technology side, Blue Edge, we hear a lot about the need for efficiency across water systems. So can you discuss first how AMI meters then lead to SaaS revenue, but then also the additional capabilities that you've added to your suite of digital products?
Yeah, you bet. So, I would start with, Blue Edge for us is not something that you buy. It's more a vernacular or a structure around which we talk to meet our customers no matter where they are on their digital adoption journey. Generally, the starting point of that digital adoption journey is AMI because there's a core function that utilities need to do that they're highly reliant on for labor and other limited resources to do, and that's to run their meter to cash cycle and to essentially charge their customers for the water that they use. And so when you can drive AMI and your AMI solution becomes chosen, you essentially now have a customer that's orienting their utility operations around not only your hardware, but your software. And it's the insights and the analytics that you bring to bear in AMI that starts a utility that's already been a sticky customer and makes them even stickier. The way we monetize that software is that we sell a piece of hardware, a radio in this case, on top of one of our meters. And then to enable that radio to be smart, to communicate, in our case, over a cellular network and backhaul data into a cloud-based software that then provides those analytics, we charge a per meter per month basis. So when our radios are chosen, it's a 100% attachment rate to our software. So it starts with the decision to adopt AMI. It leads to hopefully a differentiated choice toward a preference towards cellular, which I could talk hours about the advantages of cellular versus fixed networks, but I won't. Save that for a future conversation. And then it's that which creates that durable, growing at a 28% CAGR software as a service attachment rate. Now you have a utility that's using your AMI system to do those activities, but they also face other challenges around water quality monitoring and wanting to know on a more real-time basis at either compliant sampling points or at the water treatment plant, or even on a dead end of a cul-de-sac, what is happening to the water once it leaves the treatment plant? Because those are blind spots for utilities, blind spots that lead to aggravation or pain points with their residential and commercial users. And so their desire of a utility to now want to understand more real time, their water quality has expanded in recent years. And now if you can buy an additional module that just sort of tacks on to our Beacon meter as a cash software system, we can now bring additional insights. And the interplay between, let's say, flow measurement data and water quality data and pressure management data used to exist in individual silos. And now we can bring together under the single pane of glass, if you will, approach to being able to enhance the insights and the analytics. So it usually starts for a utility with, I want to go from manual read to AMI, or I want to go from drive-by to AMI. And once that decision is made, it becomes a lot easier to sell them these around the meter hardware pieces that only enhances the analytics to help them drive decision-making and investment decisions in some cases around where they're going to allocate their scarce resources for the aging infrastructure that they already know is too big for them to spend on all at once. We help with that prioritization. And so again, smart cover is just another example of that. In the very brief period of time we've owned smart cover, we've had one or two customers say, look, I understood what smart cover was, but I didn't want to buy it because I didn't want another piece of software. I didn't want the fifth login that I need to manage all my hardware and equipment. And now the vision that, hey, we're going to be able to bring together all of those solutions under one pane of glass that's easier to use, single sign-on, and the analytics interact with each other as opposed to just homogeneously. It really enhances the analytics and the desire of those utilities to invest at a more rapid rate and spend more money with us, quite frankly.
So you noted the fifth or sixth inning for meter upgrades. What inning are we in terms of penetration of this monitoring or predictive maintenance technology across the U.S.?
Yeah, so you're right on the AMI side. So, drive-by systems, the first drive-by system was launched in the 80s. The first AMI system, again, albeit a fixed network, was early 2000s. So we've been at the smart meter game, whether it was drive-by and then now AMI, for call it 40 years. And so after 40 years of hard work, in the North American market, about 75% of metered connections have some form of radio communication on it. And in large part, about half of those are AMI. So over the total journey of 40 years, it's taken 40 years to get to 75%. So there's still 25% or roughly 25 million connections in North America that are manually read. So from an opportunity standpoint, there's still 25% of the market to adopt some form of radio communication. On the half of that deployed base that has a radio on it, that is AMR, that's ripe for stepping from AMR to AMI. And now even the oldest AMI systems that were deployed 20 plus years ago are falling into the replacement cycle. So we often talk about, on the metering side, about 85% of annual volumes in the North American market as a whole are replacement driven. Radios are beginning to approach that level in some ways, and there's still a long way to go. So when I say, the drivers of our business aren't being concentrated here and only being able to deliver for 1 or 2 years, this journey has taken a long way to get there, and there's a long way to go just on AMI. Now take that into water quality monitoring, other forms of network monitoring, pressure management, lift station monitoring, sewer line monitoring. We're at the very beginning. So if the first version of the story I gave you was the 5th inning, I would tell you that that latter bucket of network monitoring is, we're maybe even in pregame warmups, let alone the first inning. Now that's a harder sale because you're selling fewer things that are, not as deployed and in mass, but every one of those sales is simply enhancing and protecting that metering base that otherwise, wouldn't be as protected. And you relatively have sort of a captive utility audience. A utility that was already buying your meter for decades is now orienting their operations around your software. If it's possible to take a sticky customer and make them even stickier, we've done that with the software. Now we're able to do that to a second degree or a third degree as we bring more of these censoring capabilities and analytics capabilities to bear.
So with the minute or two we have left, if there are any questions from the audience, I'll open it up. So you touched on free cash flow. You generated a significant amount. The balance sheet still is in great position. Maybe dive into M&A and the financial and strategic criteria you're looking for at this point.
Sure, yeah, and so to be honest, right, we don't strive to have, prior to SmartCover, $295 million on the balance sheet. It's more a function of available actionable targets. We don't feel a whole lot of pressure to go do something for the sake of getting bigger or adding a second leg to the stool. We are a pure play water company, primarily in utility municipal water, both in the distribution network and in the collection network. So that's core to where we are. We're going to look for those very near adjacencies. So the things we've done with AquaQ over the years, or SCAN or ATI, those are representative of the types of deals we will do. From a return hurdles and metrics standpoint, we look at every acquisition as one of two types. It's either what I'll call advanced R&D, meaning we could do it ourselves, but it'd take us a real long time and a lot of money, and we'd rather accelerate that effort through advanced R&D. The return hurdles for that are different. Like SmartCover as an example, the return hurdles from our perspective are different for a SmartCover acquisition than if we were to say, go buy a regional meter player in a foreign jurisdiction beyond North America. Return hurdles on that type of acquisition would be a much quicker payback, immediate EPS accretion, and likely ROIC in excess of WACC near immediate. Whereas on the kind of advanced R&D side, we're willing to live with longer time frames like that. I will just tell you this, is that our long-term incentive plan, at least 50% of it is oriented around return on invested capital. So we're incented to do the right strategic things that provide a maintenance, if not extension, of our return profile.
Great. And with that, we are just at time. So Bob and Karen, thank you again for joining us this year, and we look forward to seeing you next year.
Thank you.
Thank you.
This podcast is an excerpt from Gabelli Fund's 35th Annual Pump, Valve and Water Systems Symposium. GAMCO is providing these links as a matter of general information. We do not intend for these links to be a complete description of any security or company, nor is it a research report with respect to any of the companies mentioned herein. As of December 31st, 2024, affiliates of GAMCO Investors Incorporated beneficially owned 5.1% of Gorman Rep, 3.3% of Graham Corp, 2.65% of Enpro, 2.44% of Watts Water Technologies, 2.41% of Mueller Water Products, 2.05% of Flowserve Corporation, and less than 1% of all other companies mentioned. One of our affiliates serves as an investment advisor to Crane Company or an affiliated entity and has received compensation within the past 12 months for these non-investment banking securities-related services. The analyst's views are subject to change at any time based on market and other conditions. The information in this posting represents the opinions of the analyst and is not intended to be a forecast of future events, a guarantee of future results, or investment advice. Views expressed are those of the analyst and may differ from those of other GAMCO officers, analysts, other employees, or the firm as a whole. Because the investment personnel at Gamco and our affiliates make individual investment decisions with respect to the client accounts that they manage, these accounts may have transactions inconsistent with the information contained in this posting. Certain Gamco personnel may know the substance of the posting prior to its posting. This webcast is not an offer to sell any security, nor is it a solicitation of an offer to buy any security. Stocks are subject to market, economic, and business risks that cause their prices to fluctuate. When you sell shares, they may be worth less than what you paid for them. For more information, a prospectus or summary prospectus, visit our website at www.gabelli.com or call 800-GABELLI or 800-422-3554-914, 921-5100 fax, 914-921-5118 info@gabelli.com.